In this video, I will show you some of the steps I take when I open up my charts to start trading, and I will show you step-by-step process on how you can also go about it to get 50 to 100 pips a day. This is the CHF GPY on the weekly time frame. I usually use the higher time frame in order to get the overall trend, and the first thing I would like to do is plot out my support and resistance zone like we have here. This is a support zone, a major zone, which is a very significant zone for us, and I have another zone here which is our resistance. You can see price respected this zone a number of times, 1 2 3 4 5 6. When it broke out, a retest was done and it went back up, so it shows us that this zone itself is a significant zone. And the next thing I usually do is check is the trend in a bullish or in a bearish trend, and if I do that, I would plot out my trend line if I have any, like we have here. This is a linear resistance zone, which you can see price is making higher high and higher low. If we plot out the linear support, you can see price respected this support zone quite a number of times, so this proves to us that this zone is significant and it will be of importance when price should come back to these zones. So if I look well at my chart, I'll discover that I also have some zones which I'll draw quickly. I have a zone here which price respected twice, and I have another zone here which price respected. Now these zones will be of importance for us when we scale back to our low time frames in order to get our entries. And this is the if I go back to the daily time frame, I can see how price reacted to these zones here. If we go back to where we drew our first support zone, here it is. This is our first support zone. If I want to get a clearer view of what really happened, that price went up, I can see what really happened. We had a bullish trend line here and another bullish trend line here. So when price made this bullish channel, it broke out a retest and came back to this support zone, gave us a double bottom. A double bottom is a chart pattern that traders use to get trade signals. After giving us this double bottom at this support, price pushed up to this resistance that we earlier drew. I told you that you get a clear view of what happened in the higher time frames when you scale back to the lower time frames. Now this is what really happened. We have this resistance that held on and pushed price to this linear support level that we earlier drew, and if you look well, you can see that we have an inverse head and shoulder pattern that gave our traders the confirmation that price would really go up. If I choose the head and shoulder pattern, from here we have the left shoulder and the head, and then this is the right shoulder. Now if this chart pattern, if this should form at a support level, you should consider buying that currency pair, or you should watch out for your candlestick reversal signals, because price may reverse to the upside. I'll remove this so that we'll get a clear view. Now you can see this chart pattern happened at this bullish support level, and if we draw a little zone here, you can see price broke this resistance, came back for retest, and here we have a hammer candlestick, and after this hammer candlestick price went up to this resistance that we earlier drew. Then price made a little pullback and then continued pushing up to this, to the next resistance level above it. And you can see normally, as you all know, price moves in swing, so it will be making higher high and higher low. This is what the market has been doing since this double bottom here. This is the higher high, this is the higher low, and when it touched this resistance, it did not pull back below the previous low of the chart. So continuously price continued pushing up. So at this support level, price respected this support, pushed back again, and then we have another support level here, and you can see that at this support level we have a reversal candlestick chart patterns. We have the dojis, we have the hammer, and the shooting stars and spinning tops here at this support level. So if we go back to the 4-hour time frame and check our chart where we drew that support, we can also see some chart patterns that were hidden on the daily time frame. That is why it's always good to use high time frames and low time frames. This is the support we drew just now, this, and you see price was respected at this zone, double bottom, and then price went up. So going back to the daily time frame, and this is the support, then price broke above the resistance and then a retest, then price continued pushing up to this resistance, which we had a pullback, but the pullback didn't go below the previous low, which is this low. If we draw it to this level, we will see that price did not go below this previous low. So this continues to give us the confirmation that the trend is bullish. So at this support, we then have a reversal signal. We have this hammer here, and then price after that pushed up to this bullish resistance, and then this also means a breakout and then a retest. So this is how you get to use the high time frame and the low time frame to get trade opportunities, using your chart patterns, your candlestick reversal patterns, your support and resistance and trend lines. They are all very, very important as a price action trader.